This should be another strong year for gold. I think 5,000 is kind of a, minimal target. Maybe more likely, if you're looking for round numbers, we should get $6,000 gold sometime in 2026. That would obviously go along with $100 silver. I think both of those are reasonable targets. But ultimately, both metals are going a lot higher because I do think that we're going to have a U.S. dollar and a sovereign debt crisis. And obviously, if that crisis hits next year, gold and silver prices can go a lot higher than that. But even if we manage to kick the can down the road throughout all of 2026, I think both metals could easily hit those targets.
Gold is set up for another powerful year as momentum continues to build across the precious metals sector. $5,000 gold now represents a conservative baseline, not an extreme projection. Looking toward 2026, round number psychology and macroeconomic pressure point to a more likely target of $6,000 gold, accompanied by $100 silver. Peter Schiff, renowned economist, gold advocate, and chief market strategist at Euro-Pacific Asset Management, warns that precious metals are entering a decisive phase. The driving forces behind these projections are structural and persistent. Rising U.S. sovereign debt, long-term U.S. dollar vulnerability, and expanding fiscal imbalances are creating a favorable environment for hard assets. Even if policymakers succeed in delaying a full-blown crisis throughout 2026, the underlying trends remain intact. Should a dollar or debt crisis accelerate sooner, gold and silver could exceed these targets. Either way, precious metals appear positioned for significant upside as investors seek protection from systemic risk. Now, we present the clips from Peter's Schiff interview. Before we continue to discuss this, please subscribe to our channel, The Metal Moves, and activate the bell icon for timely updates.
If we go into a major stock market meltdown where stock markets are down, 20, 30, 40, 50%, gold stocks could get dragged down, but I don't think they'll go down as much, and I think they'll come back much quicker. And a lot of it depends on what gold does. I mean, if we see a major drop in the stock market and we also see a drop in gold, okay, then the gold mining stocks are going to get hit. But if we see a surge in the price of gold, if the money that's leaving the stock market goes into the gold market instead of the treasury market, it'd be hard to imagine, gold moving up substantially and the gold stocks ignoring that and going down. You would think that they would rise as well. This should be another strong year for gold. I think 5,000 is kind of a, minimal target. Maybe more likely, if you're looking for round numbers, we should get $6,000 gold sometime in 2026. That would obviously go along with $100 silver. I think both of those are reasonable targets. But ultimately, both metals are going a lot higher because I do think that we're going to have a U.S. dollar and a sovereign debt crisis. And obviously, if that crisis hits next year, gold and silver prices can go a lot higher than that. But even if we manage to kick the can down the road throughout all of 2026, I think both metals could easily hit those targets. When gold is up like $60, silver's, still at record territory, up above 54.30 or something, or 64.30. And as they're going into a break, they say, oh, let's take a look at the markets. Oh, the NASDAQ. And they talked about the NASDAQ. Let's look at Bitcoin. And that was it. They didn't even bother with the precious metals. And in fact, I was watching yesterday and they said, coming up, we're going to talk about Bitcoin and whether or not we're going to see a rebound next year. But they hadn't even mentioned gold or silver yet because I was waiting for that. And gold and silver, they don't have to talk about a rebound. We're at record high. So they're not even barely reporting on it. Yeah, once in a while they do mention a gold or silver stock, but they don't really encourage anybody to buy into it. They just kind of mention that it's gone up. They're still trying to, direct their audience to Bitcoin. So I think before CNBC even remotely starts to advocate for gold or silver or have guests like me that come on, I never come on that network. But if they have people that are real, gold people, it's probably not going to be until after all the air comes out of the crypto bubble and the crypto community no longer can afford to advertise on CNBC. Because, right now they're trying to, pander to their advertisers. And I think the crypto advertisers don't want anybody focusing attention on gold because they're trying to get people to buy Bitcoin instead of gold. And I think this is what's happening right now, and gold should be very problematic to the Bitcoin pumpers because why isn't Bitcoin going up? If it's digital gold and if it's supposed to be better than gold, if gold is going way up, then Bitcoin should be going up even more. But instead, it's down as gold's going up. So they got no explanation for this other than, well, gold moves first and Bitcoin moves second. Well, who says? And why? I mean, why wouldn't it already be moving? If Bitcoin is going to move on the rate cuts and the return to QE, why isn't it moving now? Right? I mean, it doesn't make any sense that it just waits for gold to stop going up and then Bitcoin all of a sudden magically starts going up. It doesn't make any sense that that would happen. Maybe that happened a few times in the past, but that might be more of a coincidence than anything else. I don't think it's a foregone conclusion that every time gold goes up, Bitcoin must go up later and must go up more. You know, I think it could just come crashing down. I think the bigger risk is missing out on the rest of this bull market, which is going to last for quite some time. So, yeah, I mean, and I also think that the risk is going to be that there are going to be a lot of people that are going to take profits too soon. They're going to say, oh, I've doubled my money or I've tripled my money. Let me get out. And, look, selling some, taking some of your profits off the table, I suppose I can't necessarily argue with that as a risk management strategy. But I think that we have a long way to go. And so I think that, people that think, okay, it's time to cash out and look for something else, I think that that's going to be the mistake that people make, thinking that it's a top, thinking that, they've made enough money and they want to get out, because I think we're starting from such a low level. Even if, the stocks double or triple, you got to look at where they moved from, and where they, how low they actually were, relative to, pasts and where they're likely to go, because I think earnings are going to explode for these companies. And so I think the valuations, are way too low, that the market is not factoring in and crediting these companies for what they're likely to earn in the future, not just from today's gold prices and silver prices, but from the gold and silver prices that we're going to have in the future. The Fed was independent, that it was very much political. But we're going to be dropping that pretense. And of course, if the Fed chairmen are there to do the bidding of the president, well, then that applies to future presidents too. It's not obviously just Donald Trump, although the person that Trump puts at the Fed will be there after Trump finishes his term. So in theory, if a Democrat comes in, the question is, will Trump's guy or gal, but it looks like it's a guy, but will Trump's guy be just as loyal to the next president? I don't think it's going to be J.D. Vance. I think it's going to be a Democrat who's going to be the next Fed chairman. So will they have to wait until this term is up to put, their rubber stamp puppet in there? But all of this is going to undermine confidence in the dollar, in the U.S. economy. It's going to lead to higher long-term interest rates, higher inflation. It's one of the reasons I think that gold and silver are making the moves that they are. I think it's not just that people are losing confidence in the fiscal responsibility of the United States, but in the monetary independence of the Fed. And that's been a big factor in enabling the dollar to continue as the reserve currency. And, that's why I think that it's in the process of losing that status to gold.
Gold and silver are positioned to move significantly higher as risks surrounding a U.S. dollar crisis and soaring sovereign debt continue to intensify. Schiff argues that $5,000 gold should be viewed as a minimum target, with $6,000 gold in 2026 increasingly realistic. Alongside this move, silver reaching $100 is also considered a reasonable projection, even if policymakers manage to postpone a broader financial crisis throughout 2026. The underlying fundamentals remain bullish. In the event of a major stock market decline of 20%, 50%, gold mining stocks could initially be pulled lower, but Schiff believes they would recover far faster than the broader equity market, especially if capital-fleeing stocks flows into gold rather than U.S. Treasuries. Despite gold and silver trading near record highs, mainstream financial media continues to prioritize cryptocurrencies, particularly Bitcoin. Schiff challenges the digital gold narrative, noting that Bitcoin's weakness during gold's rally raises serious questions. With declining confidence in Federal Reserve independence, rising inflation risks, and mounting debt, Schiff believes gold is reclaiming its role as the ultimate reserve asset. For investors, the greater risk may be exiting this precious metals bull market too soon rather than enduring short-term volatility. Share your thoughts on his analysis in the comment section below. If you find this video informative, please support and turn on notifications to stay informed about our latest videos.